good, ladies and gentlemen? I hope you are doing well this evening. So here is your video update on what to expect from Bitcoin moving forward. Maybe the title has caught your attention in regards to the idea of how to get money to trade. We'll be talking about that very shortly. Today, Bitcoin decides to pull the nice little reversal. Thursday is usually the day for reversal in cryptocurrency. How much of a reversal is a different story, ladies and gentlemen. Remember that. As much as we anticipate Bitcoin to fly up from the zone that it's been holding from, when price moves away from a point that it had previously stopped going towards, that's technically a reversal. You pull up the 1 minute time frame, and if price is at 20K and it bounces from there and goes to 20,001, that's a reversal. Put that aside. The ISM Manufacturing Index comes out today at 54.4. So 300 purchasing managers seem to be a little bit more optimistic about the whole story with regards to the actual economy. But we haven't seen the contraction in the sector yet. A reading below 50 would be a contraction. That's not what happened today. Yeah, it came in lower, but things seem to be okay. More pressure for the Fed is what they're saying. Unemployment claims come out, 217,000. Projected 220, so less people are claiming, which only sets us up for the idea that tomorrow, two things are being prepared: the run for profit and the base for the weekend. Now, in relation to cryptocurrency, Bitcoin's going to be trading over the weekend. Cool. We'll be diving into that very shortly. But ultimately, ladies and gentlemen, tomorrow is the run for profit for the legacy markets. So whatever happens from now until tonight, we'll be preparing for the non-farm payrolls. If the average hourly earnings come out and show that people are earning more money, that means there's more pressure on the Fed. If the actual non-farm payrolls come out and show that more people are in work, that means there's more pressure from the Fed. That means inflation is still going to be stubborn. That means interest rates are going to be moving higher. That means the yields will fly up. That means the bonds will go down. That means prices of assets across the board will come down. Anything against the US dollar will take a nosedive. But remember, this increase in the interest rate has to take effect. The Fed's goal is to get employment rate down. If it's going up, then they just need to keep on pushing and pushing to increase interest rates. 5% in March, that's what Goldman Sachs said. Does it mean it's going to happen? What if it's more? A couple of guys on the street are talking about the idea of potentially going to 6 to 9%. Wow. That's really going to mess up the system. UK's already in a recession, according to the Central Bank of Bank of England. But the US ain't saying anything about recession. Why? Why is there no acceptance? The yields have inverted, ladies and gentlemen. And then in the last 7 recessions, before the recession was declared, the yields had inverted, which means that investors are only interested in shorter term returns. They don't see the longer term as a good bet. But the classification for the word recession has been labeled differently. So what can we roll with? We're just going to have to wait and see how high the Fed can increase interest rates. Now, let's get into the charts and understand what had played out today in our favor. Happy days. Let's roll. So, you may remember this structure that we had drawn earlier on today with Bitcoin. How about we go back in time to understand how this narrative played out? During the New York live stream today, we were having a discussion on why the Brinks box, when it forms at the lows, we would anticipate price to make a reversal to the upside. And it was during this live stream where we were having the conversation about the idea that when the Brinks box forms, we naturally anticipate price to revert back up to start recovering any previous moves that had happened in the chart. So check this out. Into the charts and pull up when the Brinks box forms. When you see price dropping to the downside, before the US session, they're either going to start the US Brinks with a stop run, so up and down, formulate the low for New York, and shift out to the upside. Happy days. We can see that that behavior had actually come into play. Notice how you've got vector candles to the left side of the chart, giving us the idea that Bitcoin traders were running for shorts. And notice how aggressive they were hitting the lows, yet they were not breaking down lower. Things started to slow down in this region by the principle of the first green vector candle that appears at the lows. So this was the clue for me to formulate this structure to give you guys the heads up, in principle, that we were getting ready to see price make a move up. You see, guys, what you've got to remember, there are two structures. You can have the Brinks from the low and the Brinks from the high. Well, what's the Brinks box, ladies and gentlemen? I'm sure you guys are well aware of the Brinks truck. This is the truck that contains the money. This is the money trade. This is where you're going to be able to grab an opportunity to exploit the market. Let's go back in the chart and try and find another example of this, because this is designed to help you train your eyes to see this structure forming. And I'm going to show you exactly the criteria that is required to find this sort of play. FOMC yesterday. Well, that's interesting. Look at the Brinks box. Brinks box, New York. They had formulated the W formation, stop hunt rise, stop hunt low, shift out. Happy days. If you had simply just run along before the news announcements, you would have been in profit on that principle here. But if you had stayed in the trade, you would have seen a little bit of trickery, which is why you don't trade the news. Let's go back and find another point in the chart where we would see the Brinks box. Oh, Brinks box to the high, Brinks box to the low. Okay, so look, there's that structure. Brinks box forming at the highs. You're looking for vector candles on the left side of the chart. That means you're looking for green vector candles to appear on this side when you're looking for a Brinks box that is forming at the highs of the session. So you are anticipating that a high has to be achieved. So let's go over to here. Look at Bitcoin on the 5-minute time frame. You've got vector candles that appear on the left side of the chart, okay? So now that's telling you that these are points of interest by Mr. Market Maker to trap traders with the belief that price is going higher, to get them to commit their liquidation points so that they can continuously believe that price is going to keep moving higher. But you as a hybrid system trader will be aware that when the Brinks box formulates at the highest point, you are anticipating a reversal to come into play because of the imbalance that happens in the chart and the fact that they had moved away from the zone aggressively, but more importantly, no reversion back into the mean. And look what happened. Drop right down. So the Brinks box played out. They gave us the trap. They convinced the trader that things are going to go higher. They brought it back down and continuously ripped to the downside. One more to put things into perspective for you. Let's try and find another Brinks box play. Oh, here we go. We've got another one. Bitcoin has been dropping to the downside. There's your criteria. Happy days. Price is dropping. So you're anticipating that they're going to try and come back up if the support shows. Stopping volume candle principle right there. Stopping volume candle principle right there. What's a stopping volume candle? A stopping volume candle is a point in the chart where price aims towards one zone in the chart, but instantly reverses at the same time. And that is a liquidity run. It's a sweep for money because down here, we can't see it. But there are tons and tons of liquidations, orders that Mr. Market Maker can obviously come back and take. And just for the nature of demonstration, ladies and gentlemen, the Market Maker is not one single person that controls all. Market Maker is a pool. It's a group. It's a company. It's a business that provides us the ebb and flow of being able to come to the charts and open a trade with no problems. They match our liquidity so that we haven't got any slippage. Now, Market Maker uses pooled liquidity. He also uses his own liquidity. And this is why you see this sort of behavior happening in the charts. Now, Brinks box forms at the lows of the session, ladies and gentlemen. We got a big green vector candle right here, suggesting that things might be changing to the upside. First green vector candle that showed itself was actually here. These ones don't count. Why? Because they were instantaneously recovered. And there was a collection of them. And it was during Asia. There's not that much liquidity happening. Look at the Brinks. Forms at the lows. New York session. Creates the structure. W formation. Shift out. Pay yourselves at the top side of the move once price deviates away from the moving average. Now, the next aspect of this video, guys, is talking about the idea of how to get money to trade. Now, nothing in life is free. I'm not going to beat around the bush and try and sugarcoat anything. Yeah, you have to pay for this thing. But where don't you have to pay? This is the cycle of life. This is how things roll. But let's take this strategy that we had, talking about the Brinks box, and let's see if we can try and take advantage of becoming funded as a trader. You see, I wanted to prove that the hybrid system is not just special because I only understand it. No. The channel is a clear representation that people understand the hybrid system and the nature of how to apply it. We got guys pulling out mad profits in the Discord, taking advantage of simple plays like the one that I just explained to you. So I wanted to put it to the test. Check this out. In front of you is the Funded Trader Program. Okay, now there are loads of other companies out there that offer the ability to prove yourself as a trader. Once you stick within the actual parameters of risk and you achieve the targets, you get funded. Now, it's a bit of a cliche. You pay to take part in this. You prove yourself as a trader. Once you've passed both the stages, you'll receive funding. That's how you get money to trade. But it's always the case in life, ladies and gentlemen. Nothing comes free, and I'm sorry. That's the truth. And we've got to accept that we're in a business where our decisions are critical. And we've got to make sure that we align ourselves with the idea and the thinking to be built for the acceptance of loss. And it sometimes doesn't go in our favor. Now, these are the types of challenges that you can take part in. I took part in 2 challenges. I took one for the 200K and I took one for the 100K. I passed both challenges. So I've received 300K to trade principally for free. Yeah, I paid to get this, but I wanted to just prove to myself that I could use the hybrid system to stay within these boundaries, because the hybrid system, it's built for all, but not everyone has the same idea about it. Not everyone's going to take the same trade. So I wanted to prove to myself that if I had to stick within certain parameters, could I pass these challenges? Check this out. The first challenge, I had to achieve $16,000, which is 8% of 200K. Right? Now, I had 35 days to achieve this, and I actually completed it in 7 hours because I scalped the living life out of NASDAQ. Now, I have the video in the Patreon which talks about this, and what I'll do is I will show you the Excel sheet which verifies the time it took me. I mean, if you just look at it, when I started the challenge, okay, I started it at a specific time, and the balance just shot straight up. And you could see when I finished the challenge, finished it all in the same day, okay? And it was 7 hours of brutal scalping, because that's what I am. I'm a scalper. Fast in, fast out. I mean, I'll get the Excel sheet attached to this video, and you can download it and check it out for yourselves. and it will show you the history of trades. But I was very aggressive because I wanted to pass the challenge. Once you complete the first phase, ladies and gentlemen, you then go on to the next phase, all right? Which brings it to 5% on the balance, okay? Now, I achieved this in 95 trades, all right? And it didn't really take me long to achieve it. I started trading on the 18th, and we finalized it on the 27th, but I only took 95 trades in total. So we passed that phase 2. Happy days. We then get funded. And now we've got 200K funded, phase 3, real cash, courtesy of Funded Trader, and anything that I make on top of this, or should I say 200K, I get 80% for free. Costs me nothing but to trade. Today we exploited NASDAQ and we picked up ourselves 2.6% overall. I've been trading 2 days on this account, and so far we've placed 108 trades. And here are examples of the trades themselves. I go across, took a few losses, and we are pretty much even on our trades, but we've just started, so it's a bit of a small sample size to roll with. Now, the next funded account that I have is the 100K one, which is this bad boy right here. So that's phase 2. I've passed this, and I'm now waiting for them to give me the details so I can log in and have access to 100K on this. This was a 53% win rate, but I was scalping. It was actually swing trades that I did with this one, and I achieved it in 26 trades. Okay? So we did good. In essence, now is the proof of the hybrid where I then look to try and extract profit from the system now. Now I can withdraw 5K. I get back my initial balance that I paid to take advantage of this service. And now we're square. Technically, I've got this money free of charge. Doesn't cost me anything. It hasn't cost me anything. But don't get it twisted, ladies and gentlemen. It's not easy. This does have a high failure rate. It does. And only the people that are disciplined can really take advantage of this. This is a hard thing. If you're used to allowing your trade to go against you, now listen, I'm a discretionary trader. I have no hesitation to allow my trade to be in a drawdown for a while because I can absorb it. But with a funded program, you can't do that. You've got to make sure that you pay yourself, take the money, and cut the loss and stay within the boundaries that they give you. Because ultimately, guys, the business is all about risk. That's how you can get money, ladies and gentlemen. All right? If you want to try out Funded Trader, check out the link in the description. You get 5% off your actual balance. If not, go and Google Funded Trader. Test yourself. Can you do it? If it's not Funded Trader, try another company. Can you prove yourself as a trader to stick within parameters? Are you going to allow your liquidation point to be your stop loss? These sort of programs are designed to get you familiar with the idea of paying yourselves. We've got guys in the Discord that have got 80% win rate on these sort of challenges, scalping the life out of them. As it stands right now, ladies and gentlemen, I'm preparing to select 3 people from the Patreon itself so I can pay for them to get funded and pay for their challenge and show them how it can be done and train them up to get funded and hopefully do that across any Funded Trader platform. If I can help these people get funded, they are technically trading for free and they're not risking their own money. So it's a different mindset. Because 90% of people that come to the game of trading are using money that they have worked for. That's the average. Hard-earned cash is being put up. And that's how traders can go into a spiral. If they lose 50% of it, oh my God, I've lost my money. You ain't going to do well with that mindset of loss, because then every trade that you take, there'll be the fear of losing more. And that's not what this game, in principle, you can't be in this game using money that you can't afford to lose. The only thing that you can lose when you do these sort of programs, ladies and gentlemen, is the amount of money that you paid. If you've got $1,000 and you take advantage of one of the challenges and it costs you $200, all you can lose is $200. You're paying for a service. Cool. But if you have $1,000 and you put it into trading and you go in 100x and put $400 in your position and put the rest of it as margin, then your liquidation gets hit. What have you lost? $1,000. At least you give yourself a better chance when you take advantage of a trading challenge. And you have to stay within those parameters because, funnily enough, that £200 is something that you don't really want to sabotage and lose. Yet you'll use $1,000 and open a high leverage position with the hope of how much money you can make. Let's put it into perspective, ladies and gentlemen. Isn't that the problem with most traders today? The excitement of money. So when you try these challenges, your mindset's different. You got to think differently. Because in essence, you're being tested. But when it's just you and your balance, you keep your mouth shut and you're trading away, who are you accountable to? No one. You're accountable to yourself. And sometimes you think, forget it. It's only $1,000. I'll just work and I'll just deposit some more. Yeah, how about you keep depositing, bro? How long's that going to last you? Because trust me, I've deposited enough. Days where I would put in 10K to try and take advantage of a good trading week. And in the first 2 hours of depositing, gone. Done. And you sat there scratching your head thinking, what the hell just happened? You ain't even got time to even register. Like, what on earth? I deposited the money 2 hours before, and now it's gone. What's next? Well, quite frankly, ladies and gentlemen, Bitcoin is now currently forming a very interesting structure. We've got the green vector candles down at the lows, going to the higher time frames. We'll have a little bit of a better understanding of where we are. Is price getting prepared to do the dirty? Non-farm payrolls coming out tomorrow, ladies and gentlemen. You know what the flavor is. In Asia tonight, we may be getting sideways price action. Rolling over to the dominance of the dollar, we can see bright as day that Dixie has done everything that we anticipated it to. Straight back into vector candle recovery. Go back into not today's stream, the stream before, and you'll see that we made reference to this zone as the footprint that Mr. Market Maker or the guys that roll out with dollar like to send price back to. Remember, dollar, the index of the dollar itself is made up of a basket of assets. Okay? And this is bright as day, only telling us that they're preparing to continue higher, which only means that going into Asia tonight, ladies and gentlemen, with the news announcements that is due, the yields pumped up. Now they're pulling back with a little bit of a consolidation. That 4% region is still holding. Oil looking to come down. Euro USD bleeding out and going lower. Coming back into vector candle zones when it decides to. USDT, remember what we said. The stop hunt low, shift out. Stop hunt low, shift out. FOMC. Are they preparing USDT to come back towards that 7.57% zone? Ladies and gentlemen, yeah, how to get money to trade. It's not free. I've told you that. I'm not going to beat around the bush. Yeah, there is a link, probably my first link in 2 years. You either pay 5% more or you pay 5% less if you take advantage of one of those challenges. But ultimately, you have yourself strategies that you can utilize within the hybrid system. just taking that concept of the Brinks box where you are expecting a reversal to happen at some point. When you see price dropping to the downside and you've got vectors to the left of the chart, you can see that these are zones that they could potentially come back into. You're waiting for green vector candles to appear at the lows once you have sensed that there is aggressive nature at those lows to mark price down. This is where the market traps the retail trader to believe it's going down, because the biggest commitment of shorts happens when price is doing what? Tanking. That's where the commitment comes in. The biggest commitment of price to the upside is when it's moving up. That's the liquidity that I want to sell my short to, because I got people there buying. Mad love and respect, ladies and gentlemen. I hope this makes sense to you. Take care of yourselves. Peace.